Good morning, friends. This is time for the trade plan for 7th of July. Now, yesterday we gapped up and closed around the high point of the day. So, yesterday worked out as a trend day, and we are now closer to 10,900, which is the simple 200-day moving average. Now, what is my take on that? Well, it is a resistance, but it is a well advertised resistance. And keep this in your mind, if S&P 500 goes up, we go up. 200 or no 200. So, everybody has that average, the simple 200 moving average, as their profit target. The market may just surprise people because from what I saw yesterday, it is not showing great amounts of weakness. Yes, in this leg of the rally, the banks are lagging a bit. It takes only a day for the banks to start a catch up. Let me today start with the S&P 500 chart. Now, the S&P 500 chart yesterday has done something very interesting. Okay, S&P 500 yesterday has decisively closed above Friday's high and beyond this triangle. Now the width of the triangle is about 2950 to 3250. You can say like 300 odd points. If you add this here, this becomes about 3450, which is, I believe, almost previous highs. So this is likely to continue. Okay. I mean, earlier also people have been expecting the market should crash, it should come down, VIX has gone down, etc., etc., etc. I don't think any of that will happen. My sense is we will get past the 200 and maybe, you know, 11,000, 11,200, somewhere in that zone, we may top out if the S&P also by that time hits previous highs. Okay, so let's go back to the Nifty chart. Here, what is the expectation today? See, we've had a large trend day. Now, what can happen from here is that today we move in this sort of a range. So up and down, around 10, 730, 740, you want to buy and around 10,790, etc., you should want to sell. Okay, so nothing to worry about, but today may not be as spectacular as yesterday was. This is the daily chart. Still no trouble here, although we are getting a bit away from the 20. But given the momentum of this market, these are things that we'll have to deal with. But nobody should, you know, think that the market is slowing down or is going to correct in any sort of great fashion. From yesterday, we have short puts at 10,600, hedged by 10,400 puts. We have 10,500 short puts, hedged by 10,300 puts. Even if the market does nothing today, there should not be any great problem. Now, on the Bank Nifty, there is great brouhaha about how weak Bank Nifty is, and it is lagging the Nifty, but it is not weak. My sense would be that this is a market which is consolidating. But we are pushing towards this zone. So, having closed above this 22,000 type of zone, chances are at some point the Bank Nifty is likely to pick up momentum. As far as the day is concerned, I think it should be a reasonably good day. The bears will try to push the market lower, but chances are they will fail. And I don't see 10,700 breaking in any substantial manner. So the Monday's start to the rally has been great and it's likely to continue. Let's examine the pivot situation. The support for the day is 10,686 to about 10,720. Resistance zone is 10,788 to about 10,822. Now on Bank Nifty, support zone is 22,050 to about 22,150, and resistance zone is 22,300 to about 22,393. Sectors of the day will remain basically the same sectors: autos, tech, possibly even Reliance. As I said yesterday, FIIs have again turned buyers. So I think most of the players are on the long side, other than retail as usual, because of all the garbage they have in their minds. Should be a very flattish and very boring kind of a day, but do not go short and do not have any doubt that this market is going up. That should suffice for the day. So take care, trade well, and please consult your financial advisor.